Bitcoin has managed to close a daily candle above the bull market uptrend. With just 24 hours remaining on the weekly chart, will Bitcoin be able to sustain this close, or are we going to see a continuation lower? How are the altcoin markets looking? How is the cryptocurrency market looking? And what would we expect on the macro charts now that we have invalidated most of our historical patterns? Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the bull market uptrend, the recent correction for Bitcoin, the short-term price action, macro expectations, the total market cap, and the altcoin market cap. We have a whole bunch to get into today, so before we do, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We have a VIP channel where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Not only will you get access to all of the trades we post, you'll also get access to our group chats, our general chat, our trading chart and education chat, our news, our daily video, our help, and our trade setup chat. If you are interested in more information, go to the pinned comment, click these links for our trading track record and a detailed video showing you exactly what you'll get access to and what the VIP channel is. And if you are interested, contact me by clicking my name here. Without further ado, let's dive into the video. So starting up on the price action, a quick summary, then we'll jump into the crux of our analysis. As we can see, guys, over the last 2 days, we have seen some violent movements for Bitcoin. We saw the breakdown of our prior low and the breakdown of our sell-side liquidity, which was the trigger point for that directional continuation into the prior or the next level of high time frame support, sitting at that $53,000 to $52,000 region. Now, of course, this area was represented by a low historical resistance range as per the VIPV, which we said in our prior video. If we were to see a breakdown of our sell-side liquidity, we would likely see a very violent move toward the downside, as we did see. In the past 24 to 48 hours, we have seen a large move back upwards, eating up most of that downside wick, resulting in the price pushing back into this lower liquidities level and to retest our prior lows on the daily. If we move over to the higher time frame, we can see with that daily close, we have managed to very slightly close that candle back above the bull market uptrend, but not above that 200 moving average. So something we'll be discussing in today's video in just a moment. Moving over to the market data, our 24-hour volume is down 59%, sitting at 95 billion. Our 24-hour liquidation is sitting just shy of 200 million at 55% down for the 24-hour period. 24-hour liquidations, as we just mentioned, 200 million. 25 million coming from long positions and a total of 174 coming from short positions. If we go ahead and take a look at that DXY price action, we can see the DXY is moving steadily toward the downside over here. Not all that much movement, but we have seen some more bullish news come out. Of course, we had our NFP data and our unemployment rate data coming out slightly moving toward the bullish side, indicating inflation is in fact slowing down a little. So with that, we do see a weakening dollar. And with a weakening dollar, we do see that DXY correct. Now, as we know, if we see the dollar weaken, if we see inflation come down, we generally see risk assets start to slightly move upwards again. So we can see over here with the S&P 500, we are seeing the S&P 500 continue aggressively toward the upside. Sitting at 5,600, we are still expecting that 6,000 target overall. Again, provided the S&P 500 is able to maintain these prior high points at 5,300, we are expecting directional macro continuations much higher over here. If we do lose this level, that is when we expect this high time frame trend to potentially break and for us to enter a macro downtrend. That is it for the broader markets, guys. I want to keep it nice and short and sharp. Let's go ahead and jump into the crux of today's analysis, because again, we are going to go over a whole bunch. Bitcoin dominance. We're going to be going over the total market cap, the total 3 market cap for altcoins. We're going to be discussing the short-term price action in immense detail, and as well the implications of the daily close, and most importantly, the upcoming weekly close in 24 hours. So before we do, a quick word from today's video sponsor. Go ahead and check them out for 15% of your trading fees and $5,000 in bonuses. I'll play a quick ad, check them out, and we'll get back into the video momentarily. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and get stuck into it, starting on the total market cap and altcoin market cap. Let's start on the altcoin market cap. As we can see over here, the altcoin market cap has seen a massive reduction from those highs of around 76 billion, or should I say 760 billion, better yet. We've seen reductions to sub 520 billion. With this reduction, we have seen, of course, a massive downtrend in both the price action and of course the RSI, which is representation of our momentum. If you remember back to around maybe a month ago, we showed you this particular RSI chart and we talked about that the deviation range would be the potential bottom for altcoins for a macro reversal. So what are we seeing here? We have seen a correction into a high time frame area of support at that $520 billion level. With that, we have got our established downtrend. We've got our deviation low to our downtrend. This is going to be a very classic descending channel formation. We can validate our peaks of the descending channel with the peaks on the RSI, again indicating we do have a valid downtrend as represented by our momentum. With this, we can expect this to be the potential bottom for altcoins. We can see we have got rejections from the mid-level of this channel, and every time we break through our mid-level, we see rallies to the high ranges and low ranges of the channel, again further validating the fact this is a descending channel, and this channel is actually accurately represented. With descending channels, we do eventually expect breaks toward the upside. The only thing about descending channels is we don't really know how long they can extend for before those breakouts can occur, meaning we could see continuous chop toward the downside again for a period of time before we eventually see those rally toward the upside. However, what it does tell us is we do have clearly identifiable trigger points for points of which the buyers step back in, and most importantly, points of which the next directional move is expected. So if we drag that trend line across, we can see its upper level of resistance is going to be our down sloping resistance, and therefore when we are able to sustain above this level, we are expecting directional continuations up into our liquidity range for altcoins. That would potentially trigger that next directional move. If we look at our mid-level, we can see we found support in our mid-level. We broke down, we saw directional continuations to low, we saw eventual break up of the mid-level, we saw directional continuations to the range high, we saw a breakdown of the mid-level, directional continuation to the low. So we can also use that midline of the channel as a directional trigger point to identify where the altcoin market cap is likely to go on the shorter term. If we do see a break of this midline, we could expect to see a directional continuation to retest that macro downtrending diagonal resistance. That does mean, however, while we are occupying the lower half of this channel, we could still see downward movement and chop back into that $500 to $520 billion range over the coming weeks if we do not see the broader markets actually rebound. And by broader markets, I mean for Bitcoin to properly rebound. What we can see on the RSI is our respective downtrend. We have got our bullish high. We break this, we continue higher. This is our continuation. And we have got our deviation range where we expected altcoins to bottom in at. This deviation range has been reached as the altcoin market cap reached our prior level of horizontal support. If we do see a breakout of this RSI, that would massively increase the probabilities for us to see a swing to our downtrending range high resistance, which again, we know if we retest, we are likely to see a break upwards. So all in all, it does look like altcoins by majority have seen the majority of their retracements. We are now retesting high time frame supports. We can see potential bearish exhaustion could develop from this point, and we do see from a structural perspective how we could actually facilitate a macro reversal. That doesn't mean we are definitely going higher, but it tells us now this is a position we should be very much paying attention to how altcoins react and respond, particularly over the coming weeks for potential reversals to develop from. If we do lose this 520 billion low, we could expect one more correction to retest that 450 to 460 billion level. But again, like we said already, if we drop below that 460 billion dollar level, we are pretty much wrecked for altcoins. Altcoins are pretty much absolutely dead if we do lose that level. So there really isn't too much downside potential over here that altcoins could really undergo before entering, you know, absolute brand new lows. Pretty much every altcoin breaking below their yearly structural supports and going to new levels. So that is something to pay attention to, guys. Watch out for altcoins, watch this chart and pay close attention. The next chart we're jumping over is the total market cap chart. We can see a very similar situation between the total here and of course the altcoin market cap, a very similar structural formation. We of course have now got our downtrending diagonal resistance, our downtrending diagonal support. We have seen that liquidity grab into that range low. Exactly the same thing we just mentioned on the total 3, we'll be looking out for on the total here. What we can see is because of that midline, that dotted trend line, every time we're able to bounce, we see rallies to range highs. When we break below these levels, we see rallies to range lows. We break above this level, we see a rally to range high. We break below this level, we see a rally to range low. So we know that for us to see that reversal, that macro directional continuation upwards, for this chart to become officially bullish again, we would need to see a break of that dotted trend line. That would result in a directional continuation to the range high. That would validate this as the bottom, and we would likely see directional continuations higher. Again, the bad side or the worst case scenario here for the total would be a loss of that $2 trillion level to the $1.95 trillion level as a consequence of a breakdown of that region, similar to the altcoin chart, would result in this next gap being filled and that next leg down for the broader markets, the cryptocurrency market, should I say, which would be absolutely catastrophic. Okay, let's go ahead now and jump over to Bitcoin's macro chart. So as we can see, and this is very big, guys, we have 23 hours and 30 minutes. By the time you're watching this video, probably 23 hours until the weekly candle close. This weekly candle close is going to be the most important weekly candle close we have seen since March, not even March, February 2024, since we broke above 60,000. This weekly candle close will determine two things. Number one, are we going to lose the bull market uptrend on the weekly chart? And number two, will we see the price action bounce and get back above 60,000 in the next 24 hours to sustain above that 60K region? These are two very big questions with two very, very different answers. So let's go ahead and discuss. The bull market uptrend is significantly more important than the 60K region from a trend-based perspective. This is a representation of the overall uptrend Bitcoin has been in for the last 8 months. If we drop below this on the weekly, this monthly uptrend requires a weekly close, would be a validation that the trend is officially lost. So no, we have not lost this trend line yet. If we close a weekly below it, we will have lost this trend line and Bitcoin will very likely be out of the bull market. While we remain above this trend line, we can see on the smaller time frame, we are in more or less, we can see we're dropping just below it again, but we did close that daily candle above it. We are more or less within this green level, and this green level is going to be our liquidity level, more or less our danger zone. This zone is an area of danger, and again, an area of decision for a continuation or for a directional continuation downwards. A very critical level Bitcoin can close within and remain bullish, but if we close under it, we are very much expecting directional continuations downwards. So let's move over to the daily chart. On the daily chart, we can see Bitcoin managed to close a daily candle within the bull market uptrend, which is a very good thing. However, It did not close a daily candle above the 200 SMA. The 200 SMA being a very, very important moving average. We can see historically, the 200 moving average has basically acted as a very identifiable point to define whether or not we're in an uptrend on the macro or a downtrend on that macro. Generally, when we are sitting above the 200 moving average, we are in a macro uptrend. Generally, when we're sitting below the 200 moving average, we are in a macro downtrend. Now, this is a very lagging indicator, is a 200-day moving average, but nevertheless, it does hold some significance in terms of overall perception and psychological expectations for the market. So we would like to see that reclaim on the daily. While we sit underneath this level, we are at risk for more downside. If we do take a look at that VRPV gap we had between 56.6 to 52K, yes, we came down and filled a chunk of it, but we didn't feel it significantly. There is definitely downside risk here still for Bitcoin while we remain underneath 60,000. For us to eliminate this downside risk, we need to get back above and really start closing above the $60,000 to $61,000 region. This green triangle, we need to essentially break back above. If we break back above this region, the downside risk significantly reduces and we more or less expect directional continuations upwards again. While we remain under this level, we could definitely see directional continuations downwards. Again, like we said already, the next area of support for Bitcoin is still going to be that $52,000 to $50,000 region. That is still going to be our high time frame support. Now, if we're looking at Bitcoin from a macro perspective, from a bull market perspective or a 4-year cycle perspective, again, the 4-year cycle as we know it has not been broken because we can only validate the 4-year cycle once it has happened, but the specific structural and technical patterns that we generally see occur during the phases of the 4-year cycle have very much been invalidated. So that massively reduces our ability to say for sure whether or not we're going to see macro bear market start, because we are in a situation where we haven't really seen this specific technical and structural pattern play out at this phase of the cycle. We can only go off level by level. So from now on, it is very important to trade these charts and have expectations on these charts, not from, a bull market or a bear market perspective, but more or less from a level by level perspective. You are now trading this based on high time frame ranges rather than high time frame historical patterns. Two different things now. If we zoom into the smaller time frame, guys, we can see that with that daily candle close, although it was fantastic, and although we've seen a very strong move upwards, we were not able to get above that prior low on the price action, this prior low being at 58.3. This is still going to be a local area of resistance. Again, if we break above here, expect continuations. If we break above this level, I would expect continuations upwards, potentially into that $60,000 to $61,000 region. However, if we fail to get above this level, this would be a rejection point. This would be a lower high, okay? And we could potentially then expect the price to come back down and fill up that gap again, once again, guys. So we could expect that downward movement once again. So the whole premise of today's video is to show you on these charts that we are seeing an attempt here to see a reversal. We have seen a significant pullback. We have reached major high time frame levels of supports. We have now broken out of how historical, macro, technical, and structural patterns we have seen from prior cycles. So now we need to analyze and view and trade these charts on a level by level basis. So support, resistance, etc., volume gaps, so on and so forth. So now we're looking at our totals, we're looking at our Bitcoin dominance, we're looking at our total 3, and we're seeing these charts showing signs of potential reversals, potential bottoms being in. If we take a look at Bitcoin, we can see we are trying to get back above that bull market, but while we get back above that bull market uptrend, we still do have that downside risk. That downside risk is still there, and therefore we should not be overly bullish right now, expecting hell big moves upwards, explosive moves upwards. We should be optimistic but cautious. And I say optimistic because we haven't technically lost this level yet. We've got 24 hours, guys, until we break below this bull market uptrend on the weekly. Therefore, we should be optimistic but cautious. The downside risk for Bitcoin is still that $52,000 to $53,000 level. Again, that is the next level by level high time frame support. If we drop below that level, well then we expect lower for Bitcoin. However, we have come back down, we have retested, we have bounced. The question is now, are we going to reclaim these prior lows? And if we do, we will continue upwards, or are we going to reject? And we'll only know that answer within 24 hours. That is it for today's video, guys. Nice and short and sharp. Didn't want to go over too much. I wanted to give you a brief update and more of a detailed explanation of the market, what to expect going forward, and most importantly, how to view the market going forward, because the dynamics have really changed now. We have lost a lot of these, what we would call historical patterns for Bitcoin. To answer a very big question, is the 4-year cycle over? The answer is no. The 4-year cycle is not over. The 4-year cycle only cares about one thing, and I'll show you what that is. The 4-year cycle cares about this right here. 1,064 days from bottoms to tops. 1,064 days from bottoms to top. Every cycle, 1,064 days. We don't know if the 4-year cycle is over unless we create a top in that 1,064 day mark, which is going to be October 6, 2025. Until then, provided we do not invalidate that prior low, technically, even if we come down and go back upwards and create a high, the 4-year cycle would have played out, because the 4-year cycle does not care about the price variations of the asset between the two dates, only that we create a top and bottom on those specific dates. So it's very interesting to say that, because we could basically reattach ourselves to the expected date range trend of the 4-year cycle. So remember, the 4-year cycle is not what happens between these dates, rather whether or not we see bottoms and tops on those dates, okay? And what happens between those dates are simply human nature of trying to identify similar patterns to apply to current scenarios to get a better understanding of what is happening, sometimes in environments where you cannot predict things. That is it. So these historical patterns we have seen, although apply and have massive significance as they tell us the overall strength of the price action, do not necessarily determine whether or not we are broken out of the 4-year cycle or not. So that is something to pay attention to. Thanks for watching. Catch you guys in tomorrow's video. Sorry about my throat today. I've been very, very sick lately, so forgive me on that one, but I'll see you guys in tomorrow's video anyway. Catch you then.